Hello and welcome back to Volatility 411. I'm Kevin Davitt, part of SIBO's Options Institute, and it's Monday, November 1st. Another month, another new high for the S&P 500. Now last week, U.S. equities continued higher with the S&P 500 gaining about 1.3%. 10-day realized volatility for the S&P 500 index is down to about 6.8%. 30-day historical vol is constant at about 14%. At-the-money SPX options that expire in a month have been trading on a 12% implied vol. The VIX index has been chopping between about 15 and 17.5 for the past few weeks as earnings season continues. And this week earnings will continue, but the leaders in the S&P 500 have mostly reported. Wednesday, there's a Fed decision with many expecting some clarity for the potential timeline for the Fed to start tapering their monthly asset purchase program, and that could be market moving. On Friday, there's a monthly jobs report, which is also important. The labor market has been improving in a choppy manner, so we'll see how many new jobs were added last month. Shifting back to the VIX, the index is measuring around 17 as I sit here, so that's up about 3/4 of a point today. The term structure remains quite steep with the November futures around 19 and December just over 21. In other words, a little more than a 2-point spread between month 1 and month 2. The curve is steep looking further out until it flattens at the back end with April, May, June, and July futures of 2022 all trading around 25. The standard November contracts that expire on the 17th have just over 2 weeks to go. The at-the-money 19 strike straddle is worth $350 mid-market, so it's pricing in an expiration range of 22.5 to 15.5. And we'll see how accurate that forecast happens to be in the coming weeks. That's Volatility 411 for Monday and the start of November. Thank you very much for tuning in.